All right, and welcome back for another episode of Carnivore Trade. Today is Wednesday, April 6th, 2022. If you've not done so already, please like, comment, subscribe. Come find me at carnivoretrades.com for swing trading alerts and analysis. What a reversal today, and then another reversal, and then another reversal after that, and even a little bit of one here in the final half hour. Now, it looks like there's a 448 pin on this market, which essentially means that we do have the Wednesday OPEX on the spiders here. And I was wondering why, was surprised that it didn't push through that 448 handle. Essentially, you had this kind of, bull trap, then a mega bear trap. And then they essentially just wouldn't let it get through that 448 handle. And I was like, what? I thought it would at least get up to that 450 area before pulling back, maybe even fill the gap based on the velocity we had coming off the lows. But it looks like they're keeping it off that 448 there to make those calls for today expire worthless. But anyway, you slice it or dice it. They got the bears. They got the bulls to jump on long here. Nice algo pop on the Fed minutes. And then they got the bears and the fresh shorts. They got to take out these stops here and the fresh shorts coming in, shorting lows, and they ripped their faces off as well, putting in a higher low here. Ultimately, this is nothing more than pretty much just a pullback day. If you slice it or dice it here, take a look at the VIX, by the way, coming way off the highs here. Got into that necktie there and hit this trend line here going back quite a while. But yeah, nice move there on the VIX, big reversal. But either way you slice it, I tweeted this out this morning. We came down here, gapped down, and I said, if we can have a reaction off the 20 moving average, there could be a potential short squeeze in this market. And that is certainly a possibility going into tomorrow. Again, the reason why we haven't pushed higher is likely because of that 448 pin. It looks like that is in play. But overall, nothing terrible here, just kind of a test candle. It's pretty much just a 382 retrace as well here from the lows, very close to that area. So, nice support. You also had the 50 moving average down below that. So nothing to say, maybe the market can't test that area. We do have Bullard speaking tomorrow, and he is the MVP for the Bears. So we'll see what he says tomorrow and see how the market reacts. Overall, you had to expect that what the Fed said today was partially priced in. It was really just the Fed minutes, which is last month's FOMC, kind of what was said. And it's pretty much, hey, some governors expected a more hawkish stance, et cetera, et cetera. There's nothing really new in what they said there. The 50 basis point hike is on the table. That's something they were talking about since January. So it's not surprising to see the market pop off the lows here. So really, that's really what it comes down to. And, it's okay. So what can take the market down? And everybody's like, okay, well, what we've got inflation, we've got a war, we've got the hawkish Fed, and the market still doesn't go down. The answer is mechanics. So it's not going to go down until the mechanics change. And right now, there's, believe it or not, still too many bears in this market, and it's just gonna until that changes. This market can remain buoyant. So just bear that in mind. Even with today being a partial Fed day, Fed minute day, we're still not even at average volume here. So on the spiders. So again, the market is, it's floating up on light volume, and you got to respect that. You don't want to short a dull market. Now, you can make a little bit of money on the bear side. Nothing wrong with that. But, we're not expecting big moves just yet. I still think that there is the possibility for another, decent bull kind of move here in the month of April. Then I think we need to get pretty cautious. But overall, let's just look through here at some of the equities. So triple Qs here. Again, same thing as the spiders, gapping down into that 50. That's going to be major support when you gap down that hard into it. And obviously, triple Q is getting hit harder with the higher yield today, but getting a nice reaction off that 20 moving average. Also, same kind of deal, right? So that 50 MA just below it, which kind of coincides with the 50 MA on the spiders, also getting into a 382 there. So again, there is potential for a bit of a squeeze here, if to squeeze out some of those late shorts and some of those people who are chasing the lows here, especially this afternoon. Also note the semis never made new lows today, so always look for that, and that is helped keep tech somewhat buoyant here in the afternoon. Anyways, Russell 2000. So this one is the weakest right now, gapping below that 50. Not in a great tactical position here, all things considered. I think this got into a 50% fib, if I'm not mistaken. Yep, 50% fib there. Again, could be a little bit more upside if the market has some upside tomorrow. But overall, this is the weakest, and we've talked about this with the weekly time frame being not pretty not good at all, and the monthly as well. So inside bar on both the monthly and the weekly, not a great look there for the Russell. But overall, it can remain, buoyant if the market, the rest of the market does for the meantime. As far as the Dow is considered, diamond here, again, gapping into that 50 and 20 moving average, getting a nice bounce off of that. Remember, the Dow has a lot of consumer staple stocks, so those do well in a higher rate environment, and that has been pretty much the case really all week as rates have pushed higher. Let's take a look here at the semis. We talked about those a minute ago. So again, gap down and then coming off the lows here. Good amount of support in this area. Got that gap just below. Didn't quite fill, but nice green bar low there. So this one could get a nice move up here tomorrow. Assuming that we do squeeze, and we'll continue to watch that, obviously, but right into the 618.75 area. So a little oversold near term. We'll see if that gets a bounce. IGV, also same kind of deal, right into that 50 moving average. And, again, going into today and early into this week, I was kind of expecting some type of a chop, some type of a pullback move as it is. So, I don't really care what kind of news is driving it. It's essentially, just based on the charts alone, essentially, I was expecting a pullback. I made that clear to the members as well. So, just because there's news that causes a pullback, should you be surprised when there's a pullback? So, I guess that's the way I look at it going into these Fed statement days. And, a lot of the stuff just seemed to be somewhat priced in here in the near term. But anyways, IGV pulling back, was overbought. If it can get a leg up, it can get to that 360 handle altogether. But, again, just a little overbought here in the short term, and we're seeing some pullback action here. Another area of concern we've been following here is the transports. So this is really oversold here short term. But, as soon as you lose that green bar low there, that's usually an indicator there's trouble ahead. Again, you do have some support down in this range. The jets are holding up really well. There was a deal. So JetBlue did bid for Spirit Airlines. That stock mooned on the news there, and JetBlue did sell off. Typically, that will happen when the market is concerned they're going to overpay for something. But JetBlue does have some good support right in this range here. We'll see what happens tomorrow. It does have a gap down there as well. But overall, again, same thing with the trucker stocks. JB Hunt, that one did get a bid here, finally reversing. Again, it was really oversold. Went into all this chop here. Pretty big sell-off though overall. There's the closing bell. Let's take a look at the rails, CSX, Norfolk Southern all down as well. But again, that's not Norfolk Southern. Neither is that. There we go. Norfolk Southern coming off the lows here into that green bar low. Anyways, the transports signaling a little bit of concern here. Let's take a look. Yeah, so they kept the spiders right off that 448 handle. Nothing too surprising there, to be honest. Does not mean it cannot move up tomorrow. Anyways, yields here. So continuing higher, 10-year yield getting above 2.6. And, just really what can you say? A power move. It's holding trend. It's parabolic right now, but, you look at these long-term trends here, and it is starting to push higher. It is into the 200-month moving average. It's into some resistance, but, when you have stocks that are parabolic or assets that are parabolic, they can continue to go higher, a little bit higher than you think. I still think that 30 years got a good chance to get up to 2.8. But it has lagged a little bit. Again, we have inversions and stuff like that going on, so that is not uncommon. High yield debt here is into some support. Did a little fib on this earlier. It's into the 7.5 right now. It does have support in this area, and it did come off the lows like everything else. But again, another area of concern. So we're seeing a lot of cracks in the armor here overall. But in my opinion, right now, we're not quite ready to roll over. But there are good macro reasons for it, and we are getting closer. Speaking of, take a look at the home builders getting crushed today again, down 2.3%. So don't chase these down here if you're looking to short. Wait for some type of a pattern or a bounce here. I was hoping to get these to consolidate for another week or so, or get another kind of bounce in here, but it looks like they want to break down a little sooner. We'll see what happens tomorrow and by Friday's close, if they can reclaim the lows, reclaim these lows by Friday, maybe they can get another bounce here. But overall, not a good look. Same thing with ITB. VNQ still holding up though. VNQ is trying to push higher. It's got a wall of resistance up here at 112, 113, but it's trying to consolidate that. So we'll see what it does here moving forward. All right, let's take a look. So Fins also coming under a little bit of pressure again. It does have this gap fill here on the XLF. So maybe that does get filled tomorrow. XBD got a hit as well. There is a lot of support right in this area. Kind of coincides with that high yield debt, the HYG chart. So we'll watch that tomorrow for a potential bounce. JP Morgan also rolling over pretty sharply. Morgan Stanley into double bottom as well. And Goldman Sachs losing the lows. But interestingly enough, you do have potentially kind of a falling wedge potentially there on Goldman. So if that can, come down to that 310 area, if you want to be aggressive, you could potentially take that for a long. And I mean, you get good 20 points out of that perhaps. But watch that one, keep that on your radar there. But Finn's overall acting a little bit on the weaker side here. All right, so crude hammering on this wedge. So it's flirting with a breakdown here. So closing below that 50 moving average, that wedge trend line. Typically, the one thing I'll say though is a lot of the time when you get these wedge patterns, usually the third hit is a fake break, or the first hit is a fake break. The first breakout, or breakdown rather, in this case, is a break. And we'll see what happens here. I've been expecting crude to correct, but in this environment, I wouldn't be surprised if it, ramped higher and reversed. We do have geopolitical problems, and there is a war going on, so there is always that possibility. But overall, crude down almost 5% today, just coming off the lows a little bit. Again, $90 and 85 are going to be your major support areas. XLE still hanging in there. Was green today. XOP and OIH did pull back though a little bit, but still more or less holding trend. All right, nat gas, beautiful chart here. This is one we shorted via KOLD. We just shorted this today. We are nicely in the money on this one, and really, I mean, you see a setup like this. Look at this perfect trend line here, coinciding with the double top, right into that area. I got to pull the trigger on that one. We got in right near the lows of the day, or on KOLD, it was the lows there. Our entry is right around 1390, I believe, or excuse me, 1290. And nat gas coming beautifully off the highs and closing below that trend line. So do expect a little bit of pullback out of that, at least to the 575, maybe 550, 560 area. Not looking to marry this short trade, but just a nice little technical trade set up there into double top and that trend line. Beautiful technical chart there. All right, dollar index continuing higher again with yields overall, makes sense that this would continue to push up. We'll see where it closes Friday. I'm not quite convinced that it's ready to push higher yet, but we'll see where it closes Friday. And I don't think it can get through that 100 handle. But again, in this environment, things can go, things can tend to overshoot your levels again. I told you guys a while ago that 99 was going to be my ultimate target. We got through that a little bit now after some consolidation, but it is still into a wall on the weekly time frame. Gold, kind of consolidating sideways, bearish. GDX is holding up a little bit, so we'll continue to watch that one. Silver, same kind of thing. Just watching this kind of flaggish range here. Did finish green on the day, and SILJ did pull back a little bit, but I don't hate this little consolidation pattern, so we'll continue to watch that. Platinum, I still think needs to go lower, as does palladium here. Just kind of hanging inside of this, sell-off area, so a bit of a kind of bearish consolidation overall. And copper as well, moving up here, rejecting that 4.8 area, and then moving up and sideways. So again, has to do more consolidation if it's going to get through that area, but overall, it's holding up okay. All right, for the coins here, so Bitcoin's got to hold this trend line here. This basically, you got a back test 20 moving average there. So nothing terrible just yet, but you want to see a good reaction off of that. And this is a lower low now. So this is in a bit of a weak technical position. I told you guys I didn't think it was going to get through this trend line. There's just too much resistance up here. But if it can, come off the lows a little bit, nothing to say it can't make another run at 48,000. But, keep an eye on this trend line. If that breaks, you got the 50 moving average. And then if this one goes, this thing can go a lot lower very quickly. Same thing with Ether, holding that 20 moving average for now. A little bit of a lower low, back testing this little kind of breakout area. In fact, we could probably put a little line here. So right in that area, that was your breakout on Ether, and it's back testing it. So as long as that holds, it's okay. But again, if Bitcoin breaks down, these are all going to break down. So just bear that in mind. All right, so back over to the spiders here. Overall, market was overbought, and we had to have a pullback. We were expecting that going into the week, so we're not surprised to see that happen. And again, it's coming off the lows here, but again, it's very important not to chase things into big important Fed announcements or earnings announcements, stuff like that. A lot of shorts got trapped in here, basically on a buy the news, sell the rumor, buy the news kind of scenario here. We'll see what we get tomorrow. They did back it off 448. So I think that was a Wednesday OPEX thing. We'll see if we get some upside tomorrow, maybe fill that gap. Again, Bullard does speak, so he could always throw a wrench into things. So we'll see what happens there. Anyways, we'll take it one day at a time. I'm going to wrap it up here. You guys come find me on carnivoretrades.com. Have a great rest of your night, and I'll talk to you all tomorrow.